Okay. So what does this candlestick mean? What does this candlestick mean? Hang on. What's the name of this candlestick and what does it mean? So what does this candlestick mean, and what do you think it signifies? So I'm going to explain something real quick. So when this candle formed, it opened, yeah, it went all the way down, okay, it had no wick, so it opened, the candle opened, went all the way down. At that time when it was going down, it was red in color. It was red when it was going down. It reached all the way down here and then pulled up and it turned green. Okay, it turned green and then it went all the way up here. It went all the way up here and then closed here. So it went all the way down here, went all the way up here, and then closed here. So this is the open, this is the lowest point, this is the high, and this is the close. So what does this candlestick mean? So what did you say the name was? What did you call it? So what do you think it is? What do you think it is if it doesn't have, okay, let's say it doesn't have a hammer. I mean, like it doesn't have a wick above here. But let's just say it doesn't have a wick. So what do you think, what do you think is the name if it doesn't have a wick? So what does the hammer say if you see a hammer on the chart? What do you think the hammer means? Like if you start seeing something like this. You're not sure? Okay. So let's say what do you call this? What do you call this? So it went like this. So what do you call this? So what do you think happened? So since you said a hammer, yeah, and okay, it doesn't have a wick. So what do you think happened here? Can you tell me what you think happened here? Are you there? Are you there? Okay, so you said this is a hammer, okay? Yeah, so this is a hammer now. So what happened here? What do you think happened here? Like this recent price action that I drew on candlesticks and on price action. Since you know, you said that this is a hammer, what do you think happened here? Looking at this recent action, what do you think happened here? Why is that? What do you think happened? Okay, I will tell you what happened. So a hammer is used to signify a reversal. So what this simply means is that the market was coming down. The market was coming down. Okay, remember, a red candle opens at the up and closes down. So a red candle opened, went all the way up, and then came all the way down, and then closed here. This is a red candle. This is how a red candle is formed. So a red candle opens at the top. This is the high that the candlestick made. It came down. This is the lowest point, and it closed here. So this is the high of the candlestick. This is the open of the candlestick. Okay, I will represent the open with this type of color, and this is the lowest point it's made, and this is the close. This is the close. So this is the open. This is the lowest point it made. So this is the open. The open, it went up. This is the highest point. The highest point is red. Okay, I think I'll change it to green. I don't change it to green. So it opened. This is the highest point. The red candlestick went, and sellers pushed it down, and it met this lowest point. It met this lowest point. So this is the lowest point this red candle went, and it closed here. Do you understand? So the market was coming down. You understand? So when it went here, the sellers wanted to push this market down to continue this down move. So this green candle opened here, went all the way down here. It was red. Then sellers said, no, we're going to push this price up. Then the sellers pushed it up, pushed it above where it opened. You know, it opened here. You know, this was where it opened, because this move was already red. You know, sellers were already dominant in the market, and they want to continue selling. You know, so when it got to a point, it wanted to go down again, but the buyer said no, like it's done, that we're not selling again. So they bought and pushed the price up back to here, and it flipped at the point of opening. You understand? It flipped to green, from red to green, from where it opened. Then it went all the way here and then closed. So this is the candle. This is the open. This is the lowest point it made. This is the lowest point it made. This is the lowest point it made. Then this is the high and this is the close. Or if it doesn't have a wick above it, then this will be the close. Okay, so this is a reversal. This is a reversal. The sellers couldn't continue pushing the price down. Buyers bought it and then pushed the price up and it closed above. And it wanted to go down, but the buyers were too strong in the market and they continued pushing price up. They continued pushing price up. So the hammer is a reversal pattern. So you should always look for hammer if you're this type of candle, if you're trading support and resistance, or supply and demand, or especially demand setups. So this is a hammer. Okay, this is a hammer. It's called a hammer. So it is a reversal pattern for candlesticks. You understand? So whenever you see this on your support level or your demand level, just take it. So let's talk about another type of candlestick. So which type of candlesticks do you remember again? So, but do you understand this one? Okay, so which other candlestick do you remember? Inverted hammer or a shooting star. An inverted hammer and a shooting star is actually different. I think so it is basically yes, it is when it is in an upside form. Let's get that here. Okay, let's keep this one here and let's make another one. Yeah, something like this. It's going up. Let's make it's going up and up and going up, then it's shut down. Something like this. So so what do you think happened? What can you see here? Like, what can you see here? What do you think happened? Yes, the market was going down. Then on this candle, okay, on this candle the market was, yeah, yeah, so on this, yes, yeah, so on here the market was going up, then the sellers came and pushed it down. So this was, it was going up here, and the market came, and the sellers came, pushed it all the way down here. So this, you could see, like if you watch the previous candlesticks, you will see that the market is pushing up. Okay, so here the market wanted to continue pushing up, but it's opened. It's opened. It went all the way up here. It was green in color when it was going up, just to continue making this move. It was green. Then the sellers pushed it all the way down. It flipped from green to red. It went all the way down here and then closed here. So this is a strong reversal. It is a strong reversal, and it was breaking structure, and it broke structure. So this is it's a selling type of, it's a reversal type of candlestick. So each time, like you always have to like watch out for this type of candlestick. Watch out for this type of candlesticks on your resistance, on your supplies setups. Okay, and another type of candle that I would like you to know is the Doji. The Doji is an indecision type of candlestick. I should have waited for you. I should have asked you which type of candle you think that this is, but I've said it already. So what is the name of this candlestick? Are you there? What's the name of this candlestick? So what do you think Doji? What do you think? Oh yeah, I've said it. So what do you think the Doji means? So the Doji is an indecision type of candlestick. This is a Doji. It is an indecision type of candlestick, and it is also a liquidity grab type of candlestick. This is a liquidity grab candlestick. This is a liquidity grab candlestick. What I mean is, I said liquid. Yes, all of them. So they are liquidity grab candlesticks. So like but you are going to what I mean, like, if you know them, it is very important for you to know them, like, because they are the most important type of candlestick that you have to know, because the institutions use it for trading and for manipulations too. You understand? So it is like, for instance, here in this type of candlestick, they use it to like to go up, trick people that they are about going up and then drop, or for example, or take some of the stop loss. By stop loss, I mean like people that were about buying, or people that are still buying, like people that once, when the market gets something to this place, that they will buy, that the market will trigger them to buy because they know that the market is going up. So some people will put pending orders above here. Some people will put pending orders here, and will be like, whenever the market comes to this place, that it should trigger them in to be on the market. you know. So they might use this type of candlestick to go all the way here and trigger their trade, and they will be inside the trade and they will now draw, you know, and then sell. You understand? So this is a liquidity grab candle type of candlestick. This is a liquidity grab type of candlestick. It's still a hammer, you understand, but this type of candles with wicks are for the bad moves in the market, you understand. So you have to study them and make sure that you know this type of candlestick, because they are very, very important, you know. So there are actually people that just trade this type of candles, you know, because it signifies a reversal, you know. So, and these candlesticks like this Doji are also liquidity grab candlesticks, because it is a liquidity grab type of candlestick, because they take out, by taking out I mean they trigger people below and above. They trigger people below and above. By triggering people, I mean by taking people's stop losses above and below. By stop losses, I mean like people that have pending orders, like if the market reaches to a certain stage, it should take them, I mean it should get them into a trade, you know, or if the market reach to a certain level, that it should take them out of a trade, something like that. So people have pending orders. So sometimes when the market opens, I mean like when a candle opens, you understand, for example this candle now, if there were people that were selling something like, if there were people that were selling or had their buying order above this place, you know, let's say some people have their buying orders here, you know, people have buying orders here, and the market and this candle opened, you know, went all the way up here, it triggered this equal into this trade, you understand, because they already had it here that if the market comes to this place, please, I want to get into the trade. So they intentionally pull this candle up to this place, I mean pull this candle up to this place and then drop like this, and then went all the way down here. There are people that are also selling here. There are people that are also selling here. I mean like there are people that wants the market to maybe to buy, you know, when the market comes to this place. So it comes back, it comes down to this place and then trigger them into the trade and then closes above. Can you see? It took out people that had money that wanted to buy above and took out people that wanted to buy below. Do you understand what I mean? And it just closed here. So it is a manipulative type of candlestick. It is a manipulation type of candlestick. So it happens the same thing here. People that wanted to buy and people that want to sell, you know, it takes them into the trade, and then it might just start going at the opposite direction, you know. So it is yes, everybody will be at loss, both people that wanted to buy and people that wanted to sell. So this type of candlesticks are dangerous candlesticks. This type of candlesticks are dangerous candlesticks, you understand? So there are people that trade just price action, like strictly price action, by trading with the candlesticks, you know. So these are the type of candlesticks that if you're seeing at a particular place, you know, then you know that either that sometimes that if you're selling, you know, you should wait for further confirmations, you know, to know where the market is going to. You understand? So they are sort of the important type of candlestick that you have to know. And then the big engulfings. These are marabuzos, you know. These are marabuzos. This is a bearish engulf. This is a bearish engulf, you know. So this type of candles are marabuzo, You understand? So it means that the sellers are dominant if it breaks the top of the green candlestick and breaks the low. So this is a bearish engulf. This is a bearish engulfing pattern. It is called a pattern because the market will always keep repeating this type of thing. So it is called a pattern. If you say someone is showing this type of pattern, that means the person is doing something, you know, like doing it consecutively. So it is a pattern. So this is a pattern, you know, and this is what do you think this candle is? If this is a bearish engulf, what do you think this pattern is? Hello, are you there? So if this is a bearish engulf, what do you think this is? I can't hear you. What do you say? Okay, so if this is a bearish engulf, then this is a bullish engulf. Okay, it's a bullish engulf because it's totally engulfed the red candle, but it's not. If you see it anywhere, it doesn't mean that it is already selling. It has to be breaking structure. It has to be breaking market structure to the downside. I mean, like if it is going down, you know, it has to be breaking structure to the downside like this, you know. So for you to know that, okay, you will be looking for these type of engulfing patterns, you know. So that is it. So this is a bullish engulfing, this is a bearish engulfing, this is a doji, this is a inverted hammer. Sometimes I call it a shooting star, but it is a reversal type of pattern, and this is hammer. Okay, so or are there other things? I think, what about market structures? I don't know if you've but I would actually want you to, you know, like to study more on candlesticks too, you know, because they are of, you know, you have to know candlesticks first before you advance into market structure, so that at least you'll be catching up with what I am doing, you know, something like that. But do you, yes, market structure, yeah, you can, it's in the course. If I think it would be good if you if market structure based on the market breaking candlesticks, you know, like breaking highs, you know, the market breaking structure to the upside or breaking structure to the downside, you know, something like this. Okay, you do know that. Okay, that's perfect. Okay, yeah, so you do know market structure, right? Yes. Okay, so I think I would like to give you an assignment so that you will do. Yeah, I'll give you an assignment. Sorry.